Right, hello then, everyone, as we are at the beginning of another week of trading on Monday, September the 16th. We'll have a look across markets in a pretty busy week this week. We've got the Fed on Wednesday, as you can see down here, and then got the Bank of England Thursday. We also do have the Bank of Japan on Friday, but I'm going to hazard a guess that maybe takes a bit of a backseat on Friday. But certainly the Fed and the Bank of England main focuses of attention this week. We do have Canadian CPI on Tuesday, some retail sales figures, consumer spending figures out of the US tomorrow. Did I say Thursday? For Canadian CPI. It's definitely Tuesday, as you can see here. But yeah, Tuesday for Canadian CPI and retail sales out of the US. Then inflation on Wednesday out of the UK as well. Plus retail sales out of the UK on Friday. But we'll start with the Fed. Now, you got the Fed out this week who are to start their interest rate cutting cycle. How much they cut by and how long they cut for is a different question, a question that markets cannot really answer at this point in time. And this is the first time in a long time, in like years, that we have headed into a Fed decision where we are unsure as to what is going to happen. I was reading a report from Goldman Sachs earlier on. I think we're going to get 25 basis points cuts at each of the next four meetings in September, November, December, and January. Then I read another report last week from Citibank, or Citi, and they are now called, that suggest that we're going to get 50 basis points at each of the three meetings through to year end. So some differing opinions from some of the larger banks, and that is reflected in market pricing for Wednesday. You can see here a 59% chance of a 50 basis point cut, a 41% chance of a 25 basis point cut, and the market is pretty split down the middle as to what we get on Wednesday. Now, the justification for a 50 basis point cut, not really something I agree with. I don't really think it's necessary to do. Economic data, certainly over the last few weeks as well, in particular, hasn't been too bad. It's been fine. Obviously, it's not great, but hasn't been bad. You then had inflation last week, core CPI inflation. Of course, CPI out of the US running at 3.2% annualized. Now, that hasn't been below 3% since 2021, since kind of summer 2021, which was 3 years ago, right? If you can do the maths between 2024, 2021, 3.2% core CPI is historically looking at interest rate hike territory. Certainly not having a debate of whether you cut by 50 basis points or not. So I don't think it's necessary. If they were going to do it, and if they did do it, the justification for it would be that they don't want to keep interest rates as high as they are for too long and risk crippling the economy, which from that point of view does make sense. It does make sense, but like ultimately things aren't too bad, right? The market's been able to weather the storm of these interest rates for the last couple of years. Okay, there's lag effects, and these lag effects are now firmly starting to come in with interest rates where they're at. But company profits are still okay. Inflation is still a little bit too high. The broader economy is still okay at this point in time. We'll get retail sales out on tomorrow, which is consumer spending, and consumer spending was at 1% in August. It hasn't exactly been stellar, but it's been still okay. You could have negative months, but more positive than negative. Still been kind of okay. So yeah, I'm not so sure it's necessary to cut 50 basis points. Some market participants think they are. You can see market pricing heading into it of weak dollars, which you can see across here. Stock index is pushing higher. Right, that is a dovish pricing. Right, markets are moving dovishly into the event on Wednesday. You can see yields are kind of still at the lows and still in their downtrend. So, like ultimately, markets are happy to price for a dovish outcome on Wednesday. A 25 basis point would make sense in my point of view. It would make a lot more sense than 50 basis points. But if they want to get ahead of the game and start cutting a bit more aggressively, well, then that's obviously their prerogative and their decision to make. So we'll have to see how it pans out on Wednesday evening. It should be a trade in either direction, right? Even if you want to set up a straddle and just have a kind of non-directional trade, the fact that the market is pricing 50-50 would mean that if they cut 25 basis points, you should theoretically get a move. If they cut 50 basis points, again, you should theoretically get a move. So either way should be a tradable opportunity when it comes to it on Wednesday. You then get economic projections, right? Economic projections in June and the most recent ones were in June, did suggest that we will get 3 interest rate cuts through the year end. A good chunk of market participants thought we'd only get one. The majority of market participants though thought we would get three, and it was kind of a communal decision. Or 8 out of the voting members voted for three. 7 out of the voting members voted for one. So it was a pretty even split between seven and 7 and 8, between one interest rate cut and 3 interest rate cuts. You then look at four participants of the Fed thinking that you don't get any. I think that's kind of been proven incorrect. We are definitely going to get at least one through the year end. So I'm to see how much they do go and cut by, but kind of average, kind of what the dot plot said was 3 interest rate cuts through the year end. That is likely to be proven correct. Whether we get more than that though is the question. You'll have to see some kind of repricing or rethinking of some decisions from the last one. But how low do interest rate projections go? Now, do some members of the committee, do they start to think about getting more than 3 interest rate cuts, more than 75 basis points worth of cuts? That is the question I'll be asking heading into Wednesday. And really, we'll get the answer to that 1 minute past 7. So, well, again, we'll see how that pans out when it comes to it. I don't think it's necessary to cut 50 basis points. Personally, I think the more likely scenario is a 25 basis point. But I mean, the Fed have been wrong about a lot of things since COVID has happened. What's one more to add into the mix, eh? Then it comes to Thursday, the Bank of England. The Bank of England are in a different situation. They are not likely to cut interest rates. You can see inflation then out of the UK tomorrow, or not tomorrow morning, Wednesday morning. Now, the headline figure year over year is fine, down to 2.2%, but this core CPI print expected to go from 3.3 up to 3.5, and 3.5% core CPI is far too high to cut interest rates. Right? The central bank at their last meeting said that inflation is expected to rise through to year end, and they are worried about how that will affect the medium term inflation outlook. Right? That then suggests that no interest rate cuts through to year end are necessary. Right? And then you've got a divergence in monetary policy between the Fed and the Bank of England. Long cable should be a good option, especially if they go and cut 50 basis points. If the Fed cut 50 basis points on Wednesday, I think you've got to be long cable from my point of view, and that is a trade you should theoretically be able to hold for a while. Right? It's not a brand new idea. It's an idea that people have had before and currently have. So it's not groundbreaking new information, but that is a currency pair does make complete sense for further upside if that is the set of circumstances we get on Wednesday. But the Bank of England not going to cut interest rates. 2 to vote for a cut, 7 to vote for unchanged. It'd be interesting if they change their rhetoric through the year end, right? If they change their rhetoric through the year end and say they may cut interest rates through the year end, that kind of gets in the way of my long cable idea. But again, we'll have to cross that bridge when it comes to it. We'll see what they have to say for themselves. I don't think that's necessary. If they do feel that inflation has pushed higher and is going to continue pushing higher through the year end, you're not going to get an interest rate cut, then long cable becomes an option. Again, especially if they cut by 50 basis points. If they go by 25, you're probably likely to see some dollar strength. Maybe a difficult trade Wednesday night, Thursday, but as we get into next week and the market kind of moves on from the difficulties of not getting a 50 basis point from a short dollar perspective, that we can probably look to be long sterling again. The Bank of Japan, I'm not so sure they really say too much on Friday. They're not likely to hike interest rates, right? Interest rates at 0.25%. Obviously, that's presumably going to stay firm, and then we'll look for some rhetoric around how they view interest rates going forward. Are they looking to continue to hike? We saw an official from the Bank of Japan last week suggesting interest rates may need to go to 1% by year end of 2025. Do they confirm that? Do they give us an outlook as to how they are going to reach that point? Those are the questions we need to ask going into Friday. But we got a lot of stuff to get through between now and then. We got the Fed, got the Bank of England, and we'll cross that bridge when it comes to it in regards to the BOJ. You've had a bit of dollar weakening so far today, not much on the economic calendar. Right, I can't imagine massive volatility really until you get into the Fed on Wednesday. Hopefully get some action off inflation on Wednesday and a bit of pricing ahead of the Bank of England. So the action from this week likely to come towards the back end of the week. Can't imagine too much today. So maybe is a day, possibly tomorrow as well, to keep your money in your pocket, to keep your risk in your back pocket. to open it up when you get to Wednesday, Thursday. But we'll update more on that as we go on through the week. Best of luck out there, folks. Should hopefully be a few opportunities for us this week.